This is the 10th edition, I believe, of your Big Ideas report. Could you maybe start by giving us the executive summary of the big ideas, and we'll dig into some of the themes from there.
Well, there's so many big ideas, it's hard to summarize it very, shortly. But I will say that I agree with Jensen in the quote. This is the largest investment cycle of all time. We think in history, larger even than the railroad build out in the late 1800s, driven by AI. And the acceleration in AI is accelerating all of the 5 innovation platforms that we focus on, whether it be, robotics, energy storage, AI itself, autonomous mobility, multiomics, and public blockchains. So there's a simultaneous acceleration in technology that is prompting and catalyzing the largest investment cycle of all time, and that we think is going to change the trajectory of global GDP growth. In fact, we think global GDP growth is going to be in the high single digits over the course of the latter half of this decade because of the investment dollars pushed into these technologies and because of the amazing yield you're going to get off of those investment dollars. And it's going to change people's lives. We think that disruptive innovation is going to be the majority of equity market cap by the end of the decade. And actually non-innovation exposed stocks could moderately decline. So imagine an economic boom and a set of stocks that is compounding marvelously. And if you're in the wrong exposures, you're flat to down. So we think that people need to get on board with innovation yet post haste because of the business cycle that's going to come.
Well, we heard from Jensen Huang at Davos. He's talking about the trillions more needed for AI, jobs for everyone, plumbers, electricians, blue-collar trades as well, as this gets built out. What are you anticipating in the coming years in terms of CapEx, and what are the risks to that outlook?
Yeah, we think that AI compute itself will build up to in excess of $1 trillion in spend by 2030. And the layering on of AI space compute could meaningfully contribute more than that. One way to think about it is the world is actually starving for compute power right now. The major foundation model providers like Anthropic, xAI, and OpenAI, all of which are in our venture strategy, are having to turn down business because they're not able to provide people with the tokens that they need to get their jobs done. If you go on X, everybody's posting about how they're out of Claude credits because Claude Code is using them all, and they want more, but Anthropic can't give them more because they don't have the compute data centers in order to supply them. And so we think in core AI is enough to easily justify the $1 trillion+ in investment that is to come, and humanoid robots and multiomics and these other categories of innovation also will use that compute to good effect. So we need it to train our humanoid robots. We need it for our robo-taxis. We think the demand elasticity curve for AI compute is really stretches literally into the solar system. And so we think it's going to be a remarkable cycle.
Okay, so no short of demand for compute, but at the same time, connected to that, no shortage of demand for energy either, because this is going to potentially slow things down, and maybe does AI potentially hold the solution to that problem?
Yeah, well, I think that motivating energy in to supply this AI compute is an important factor, and it's actually, within the energy storage innovation platform, distributed energy is an important node. So modular nukes are going to come on towards the latter half of this decade. Solar is delivering all of the marginal growth in energy supply, and underappreciated is, these AI compute systems, because you're developing power behind the meter, it's important that you have the batteries attached in order to load balance that power for your chips. So I do think there's going to be a lot of execution that needs to happen to get these data centers built terrestrially, which is why Elon Musk is saying, well, hey, I can navigate around that thicket of complications by sending computers into space. And we actually think that underwrites quite well. We think it's going to be cost competitive and actually cost superior at the Starship launch vehicle's economics. And so it gives him an opportunity to basically turn the dial to 11 in terms of putting compute into the world. And for the ultimate opportunity that we anticipate, we think that all of that compute will be put to great use for people, businesses, and providing amazing services.
Yeah, we might even see a SpaceX listing soon, and I'm wondering how you see that potentially accelerating Starship development, and if there's any competitors on the horizon in terms of reusable rockets.
Yes, I mean, SpaceX has at least a decade lead on the rest of the field. There are, widely reported rumors that they're going to list. It would not surprise us if they IPO'd this year. It is the largest position in our venture strategy, and so we think we'd be very supportive of a listing. The reason they're going to list is because this AI compute opportunity, it could increase the expected volume of rockets they need to launch by 10, maybe as much as 60x. And so they need a lot more rockets and a lot more launch towers in order to service this AI market. And so a listing would make sense for them within that context. And it's not just SpaceX. If you look across the landscape, there's roughly $7 trillion in market cap attributable to venture capital unicorns. A lot of them, I think, are going to come to market because we're in an age where delivering technological magic requires a lot of capital. It requires those data centers. It requires training big models. And then that capital can be put to good use servicing customers. So we think that these businesses, a lot of them will end up in the public portfolios, probably including our actively managed ETFs, ARKK and et al.
Do you anticipate more competition on the way as well for the likes of NVIDIA, perhaps especially out of China? We've got to remember it's about a year ago to the day that we had that DeepSeek moment that stunned everybody.
Yeah, I think that it seems likely that we'll end in at least a bipolar world where there will be a set of more China-aligned countries that use Chinese AI systems, whereas kind of Western markets will, frankly, be skeptical of what they can promise in terms of privacy and protection of data, and so we'll stick with the U.S. providers. On the chip side, NVIDIA is an interesting spot. Their gross profitability is a giant flashing sign to markets, like, come get us. And there are, vertically integrated competitors, including Tesla, which is going to produce chips for SpaceX, including, Amazon has its vertically integrated chips. OpenAI is reputedly working with Broadcom to develop its own chip stack, and of course Google has its TPUs, and not to mention AMD, which has a competitive set of chips for a certain class of problems. I think the demand for chips is so extreme that I think there's room for multiple players in the market. And I mean, you saw NVIDIA acqui-hired Grok, GROQ, also in our venture fund, venture strategy, full disclosure, and I think there's probably going to be continued competitive positioning in that space. Net, I don't think that NVIDIA's gross margins can stay at the spot that they are perpetually. It's still a cyclical business, and I think it'll be an exciting 5 years to come.
Is this gap between the supply and demand for chips and compute as well one of the reasons that we're not seeing autonomous vehicles being delivered on quite the timeline that we might have anticipated, or is something else going on here? What's your outlook for that space?
Well, I think robotaxis are going to be a remarkable innovation once they deliver in a scalable way. We think that's going to happen on Tesla's platform. And, over the course of the decade, that enterprise, that platform of delivering robotaxi services could grow to be worth $30 trillion collectively, global, across all providers. It does require a lot of compute to do it on an AI-first basis. And so, Waymo's service, which I use all the time, it's here in Los Angeles, they have kind of a hybrid solution and a much more expensive set of sensors, so it's hard for them to scale their platform. We think that Tesla delivering full stack autonomous on $35,000 cars, literally you can buy the car and pay $8,000 extra, and you get a perpetual chauffeur for you once they turn on full self-driving. Is really a remarkable achievement, and it'll allow the business to scale. A way to think about it is, for $1 a mile, we think the market size for ride-hail increases by more than 10x, and that's where Tesla is going to be able to deliver the service. So you're going to have a massive expansion in the number of people that are just counting on this for their daily drive around town, because it's as expensive as buying a new car.
Can you tell us a little bit about how our investors should be playing some of these calls in your report? Because, okay, if we take self-driving cars, for example, I know Baidu's an ARK investment favorite. Is that one tangent people could go along?
Sure. I mean, clearly, we think Tesla is the leader in Western markets in robotaxi. We think Baidu has, both on the AI side and for its autonomous vehicle side, has an interesting angle on the market. I think it's likely that as the market develops, there will be natural geographic monopolies where, even a superior technology will be forced to or incentivized to partner with a local provider in order to kind of get the leeway to enter into that market. So I think that's likely the way it will play out. And I do think that the Chinese manufacturers, because of the volume of vehicles they put out, because of, really their amazing ability to quickly scale new models and, new sets of sensors onto their vehicle, have a meaningful ability to deliver value here within autonomous mobility. Generally, across the space, I'd say, our actively managed ETFs, we think, provide efficient exposure to disruptive innovation, not just in robotaxi, not just in core AI, but also in multi-omics, where the AI is going to, we think, meaningfully decrease the cost to discover and deliver drugs to market, and so increase return on R&D. So we think a mix of technologies in a portfolio is important, given that they take 3 steps forward and 1 step back. There is inherent volatility in innovation investing, and we think it's going to be a remarkable, second half of the decade.